the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. While Singapore shares rose today, even as investors mull the impact of US President Donald Trump's new auto tariffs on the broader Asian region. So if we go by the Straits Times Index, it rose 0.42% to 3,980 points at 2:32 p.m. Singapore time, with a value turnover of 629 million Sing dollars in the broader market. Now let's take you through the closing numbers. As we shared with you earlier, the STI closed up 0.45% at the close at 3,981 points. In terms of value turnover, it is 1.36 billion Sing dollars at the end of the trading day. Advances outnumbered decliners 274 versus 218. Top advances for today we've got for you GMH-USD, UOB and HOPA. And top decliners we've got for you Shangri-La Hong Kong dollars, New Incorporation USD and PC Partner. Now, in terms of companies to watch, we have for you MM2 Asia after the firm's cinema chain Cathay Cineplexes ceased operations at its GEM outlet in Jurong East today. Now, elsewhere from how US and Asian automakers reacted to US President Donald Trump's latest tariff salvo to Microsoft, reportedly abandoning data center projects set to use 2 gigawatts of electricity in the US and Europe. In the last 6 months, we've got more international and corporate headlines in focus. And joining me on the Thursday is David Chow, Director at Azure Capital. David, how are you?
Hi, Tian Tian. Hi, everyone. Happy Thursday.
Happy Thursday.
What about you, Tian Tian?
Good. Take care too. And David, talk about taking care, right? Let's start with the U.S. this time around. U.S. President Donald Trump signed an order in the Oval Office to impose a 25% tariff on all cars that are not made in the U.S. Now, the move takes effect on the 3rd of April. It impacts foreign-made cars and light trucks. Key automobile parts, they'll also be hit within the month. So the move was said to have rocked the global auto industry. But first things first, how did automakers in the U.S. react to the news?
I think basically, as we speak now, I can see that the U.S. automaker shares have already been declining in pre-market trading. You have General Motors coming down 6%, Ford Motor falling by 4%, and Tesla dropping by nearly 2% after these announcements. Well, I think for this announcement, first and foremost, I think Trump, actually called it the beginning of Liberation Day. Yeah. So this was initially, if I'm not mistaken, was initially expected to be part of a series of, April 2nd, sector-specific tariff announcements, but he somewhat, brought forward this announcement. But, looking deeper, I think to be fair, I think he had, actually, forewarned the market that, some sort of auto announcement will actually be happening, a few days prior to April 2nd. So, I mean, it's not really a big surprise, that this announcement was made earlier than April 2nd. So, if we merely assess the impact on the surface for U.S. automakers, perhaps an automaker in the U.S. will be jumping for joy, as this could mean a higher price point for imported cars versus U.S.-made cars, which will, perhaps level the playing field for them. However, what we have been seeing on the ground is that the U.S. automakers actually reacted with concern to the news of this tariff. If you look at the likes of American Automotive Policy Council, which is a trade group representing the big three like Stellantis, Ford, and GM, they actually welcome the decision to exempt, USMCA compliance vehicles and parts from the tariff. However, they also emphasize the need for a more stable and predictable trade policies. And we also have the United Auto Workers Union, which again represent workers from these three big powerhouses who initially welcomed the tariff, actually saw them as a potential opportunities to renegotiate some of the trade deals and benefit for the American workers. But at the same time, they have also acknowledged the need for careful consideration to avoid, unintended consequences. And so overall, this to me, since the U.S. automakers, they are very, very cautious. And while they recognize both the potential benefits and drawbacks, they also emphasize the need for a more stable policy. And having said that, some of them have actually done some preparatory work way before. So we could see that based on our tracking, Stellantis has committed a $5 billion investments in the US, and even Rolls-Royce, Honda, Volkswagen have similar plans as well.
If we look at the numbers, David, about half of the cars sold in the US are made within the country, and of the imported motor vehicles, right, about half come from Mexico and Canada. Japan, South Korea, and Germany are also major suppliers. So you talked about how some of the automakers have already made planned investments in the US. So when we look at share price movements today for the automakers in Asia, like Toyota, Honda, Hyundai, how badly were they hit? How much of a spillover effect are we seeing in the broader Asian markets?
I see. Okay, I think for start, I was looking at it. I think Subaru actually fell 6.3%, and Mazda Motor, the small Japanese automakers, such as Mazda Motor, was 5.8%. Toyota, I think, also was off about 3.3%, and now was about 2%. So definitely, back to the effect of the tariff. This tariff will affect cars imported from different countries differently for sure. So for vehicles which come from countries like Mexico and Canada, and I mentioned earlier on that there's a USMCA compliant vehicle sort of treaty, which will affect vehicles coming from both Mexico and Canada. So basically the effect on automakers in these two countries will include something like they will need to adjust the supply chains to meet the USMCA's content and labor requirements, and there'll be an increase in compliance costs to make sure that the rules of origin and content requirements are indeed what's stated on the treaty. So this will be passed on as, I think, increased costs for automakers. But yet at the same time, this treaty also creates new opportunities for, I think, automakers to take advantage of tariff-free trade and to streamline some requirements. So I guess automakers buying these trades could see this tariff move as both an opportunity to capitalize as well as, increase costs. So in the meantime, I would say that if you ask me how long would the impact be on the share prices back to the Japanese auto car makers, I guess in the short term, it's probably going to trend gradually downwards with period of bounces, and how it perform in the medium to longer term is dependent on how they will cope with the tariffs. So I guess a money monitoring of the car sales from April onwards will be a good indicator.
I see. But surprisingly, if we look at extended trade, I think Tesla was the counter that was up, instead of Ford and General Motors. But back to the Singapore stock market as usual, David. Singapore markets appeared to buck the regional trend to move higher earlier. It closed higher as well. How would you assess the STI's performance today? Any surprises when it comes down to the biggest movers and the sectors that they lie in?
Yeah, the Asian markets was relatively resilient based on our observations. It's a mixed performance and not really a one-way down traffic, despite the US markets falling overnight as tariff uncertainty continued to hit Wall Street. And in fact, earlier this morning, STI registered to an all-time high in early trading, reaching, I think, over 3,990 points, up over 0.7% before closing lower at 0.4%. And even as we see a new wave of auto tariff coming in, Trump also, I think, remember, I think I saw in an interview late Tuesday, I think with a conservative TV network, I think Newsmax, that will actually show some tolerance and allow for some unspecified exceptions to its overall tariff programs. So everything now is very, very uncertain until April 2nd. But surprisingly, STI really demonstrated its resilience. So for surprises in the STI, not that glaringly. For the gainers, we still have construction plays such as Hong Leong Asia, doing well. I mean, not exactly a surprise as their earnings have been reported, and of course, it's a good set of results. And I mean, taking a step back, the entire construction sector is still doing well. Singapore construction sector will still be doing well this year, based on order books and on BCA's buoyant forecast.
And if you're just tuning in, when I'm in conversation with David Chow, director at Azure Capital, well, let's zoom in on the companies to watch for today. David, we've got ST Engineering, because ST Engineering's subsidiary, ST Engineering Mission Software and Services, as well as the Home Team Science and Technology Agency, they have incorporated a new joint venture company called Codex Solutions in Singapore yesterday. How significant is this as a move for ST Engineering, though?
I think in the short term, this move may not move share price that much. And I mean, after all, ST Engineering has been on a roll since late February, with share price driving up, about 38% higher. But in the mid to longer term, I think it does continue share price may continue to move higher on continual innovation, which is the core of ST Engineering, to focus on investing in new technologies and innovative solutions. I think if you take a step back, I think this partnership really aims to enhance, a software ST engineering software development capabilities, and I think in which they are also going to adopt some industry best practices to build really dedicated software development teams that will come along with the solutions. So I think as a whole, this collaboration really demonstrated ST engineering's commitment to bring innovation as part of the core and to grow through strategic partnerships. So by leveraging, I think, each other's expertise, both parties, may just accelerate the development of cutting-edge solutions while, further solidifying ST Engineering's position as a leader in this space.
And very quickly, David, I do also want to take a look at MM2 Asia, because MM2 Asia's cinema chain Cathay Cineplexes, it has closed its doors at its GEM outlet today. Now, the landlord, Lendlease Global Commercial REIT, has issued a notice to terminate its lease agreement. And if we look at the rental arrears that Cathay owes, it is 4.3 million Sing dollars that the landlord is seeking to recover up to the termination date. What do you think then is the outlook for MM2 Asia, though?
I think it's tough for MM2 at this juncture. I remember some time ago, they were trying to lease Cathay Cineplexes, in a bid to reduce their debts. Yeah. And this actually had some of the analysts covering them, getting quite excited, some time ago. And I think we also have heard from the founder as early as last month that they are not going to give up on the silver screen despite challenges. I think during that time, it had already received letters of demands from the landlords of Century Square and Causeway Point cinemas for, I think, close to 2.7 million, owned in brands and other costs. So for some of the local funds like us, we actually met up with the founder from time to time as he tries to develop business collaboration with us to tell us about his plan to actually bring MM2 to the next level of growth. And from this conversation, we could actually tell that Mary is a very passionate person when it comes to growing this part of the business. And if you recall, the company acquired Cathay back in I think 2017 for about 230 mil, and they also have said that having its own theatre would actually complement its movie production business and provide a really steady revenue stream. And I think at this point in time, MM2 certainly needs some luck for sure, after, COVID-19, when we see cinemas being shut down, and the hope of resurgence in for last year was, further delayed by, your Hollywood labor strikes, the year before, which really disrupted, blockbuster release. So, and then we also have the emergence of Netflix during the pandemic period. So I think it's a tough business to be in. If you are managing a chain of cinema, plexes at the moment. So with this latest episode, I think investors will need some serious conviction as to how long, MM2 can hold on to its silver screen business before it affects, really affects the entire business in a major way.
So there's no indication as to whether the firm can make a comeback, so to speak.
I guess we will have to see, whether MM2 is able to come out with some plans or with a joint plan with some investors, to try to hold on to this business. But as I said, they will need some very serious convincing on how MM2 is going to do just that.
I see. And further away, David, let's talk about international headlines before we let you go. TD Cowen analysts said Microsoft has abandoned data center projects set to use 2 gigawatts of electricity in the US and Europe in the last 6 months. That is due to an oversupply of clusters of computers that power AI. How would you read into this, and how concerned are you given how this piece of news comes just days after Alibaba Group Holdings chairman Zhou Tai warned of a potential bubble forming in data center construction?
Okay, for the US and Europe, I'm not exactly sure whether what are the specifications of their data centers. But as far as I'm concerned, there are certain data centers that can handle the power and cooling demands created by high-end AI hardware. And if you talk about NVIDIA's massive, I think NVL72 rack skill system, which promises 30 times a better performance in terms of processing workloads and a few times better training performance compared to its Hopper GPUs. That performance actually comes at the expense of having denser racks, higher power consumption, and more, waste heat productions. So, as far as I'm concerned, racks housing NVIDIA's latest are rated for like 120 kilowatt of power, 3 times that of the typical rack. And liquid cooling is no longer an option, but, compulsory requirement. So if that's indeed the case, hyperscalers and cloud providers, must redesign their data centers to cater to these super dense, power guzzling devices. And doing so far, is far from simple. So moving on to, whether, we could see a, potential bubble forming in data center constructions. I recall that I think Microsoft, is going to launch its first cloud region, I think, in our neighboring country, Malaysia, by mid-year this year. So after it had, announced, a US 2.2 billion investment in Malaysia last year. So in 2Q, we're going to see, more and more data centers coming up in the Malaysia regions. And if you ask me whether it's a bubble or what, I wouldn't really comment on that. But if I have been looking at the news flow coming in, as far back as only last week, we have seen Chinese data center operators, GDS Holding, they are seeking a US 3.4 billion, I think, equivalent loan for its data center operations in Malaysia. So if this loan is approved, I think the borrowing will be like the biggest ever loan in one largest industry, for the sector by any borrower in Asia. So we are also seeing, we are also been hearing news on the ground that there are also certain data center companies trying to also gain a foothold in Malaysia. And while doing our cross checks, we also come across some companies, such as YTL Power, with some of its managers saying that they do see a lot of supply on the ground, up and coming supply, but the demand is quite measured for now. So for all we know, that could be an indicator of a potential mini bubble, but I wouldn't really say it's going to be very major for now.
I see. Lots to watch indeed. Thanks so much, David, for the insights. That was David Chow, Director at Azure Capital. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.